And now, the Nigerian Senate has begun debate on a bill to amend the Banks and Other Financial Institutions Act 2020. The bill is aimed to empower the Central Bank of Nigeria to designate and supervise non-bank financial institutions. The bill focuses on fintech operations whose activities lawmakers say now form critical national infrastructure. The bill targets mobile money operations, payment service banks, digital lenders, wallet providers, and switching companies that serve tens of millions of Nigerians and process large daily transaction volumes. Lawmakers say these entities hold significant financial data but operate under outdated regulatory frameworks. The amendment seeks to ensure that the systemic importance and risk posed by these companies are properly managed. Now, Jed Oyeneye, an IT lawyer, joins us in Lagos for more on this. You're welcome, Jed.
Thank you for having me.
Now, Jed, take us through this very quickly. If the bill passes, how will it change the legal and regulatory status of mobile money operations and digital lenders? Of course, will they become equivalent to banks under Central Bank of Nigeria supervision with similar obligations and oversights?
All right, ideally, they don't become banks automatically, of course. But you see, the law gives CBN powers to treat such large fintechs as quasi-banking systemically important institutions, and they now subject them to the kind of oversight and scrutiny that a lot of banking institutions do have because of their importance, you understand, in the plumbing of our financial infrastructure. That's exactly why we have them.
Now, in terms of criteria, what criteria will the CBN use to determine which non-bank fintechs are systematically important and therefore subject to new regulatory regimes?
Well, until the bill passes into law, before we know exactly what criteria they will use, but one of the things we can consider from a lot of things we have read and we know as of now is quantitative thresholds, like the number of users that these fintechs have, the volume of the transactions. You know, we have some fintechs that perform transactions that are even more than even some tier banks in Nigeria. And I don't want to mention names, but we do know those people. And then, of course, outstanding customer balances, their agent network size. By mentioning agent network size, you know what I'm talking about. And
right.
Of course, their interconnectedness, because, you know, dependence on the payment trails and on our the NIBSS, that's Nigerian Interbank Settlement System. And of course, the volume of data that they also hold, because, you know, we are moving towards making sure that we don't just unnecessarily lose data and allow people become vulnerable. And of course, the last one I think would be very, very important is the operational risk history. You remember in 2024, there was a list of fintechs that they stopped them from opening new accounts because of AML and KYC failures. You understand? I don't want to mention their names, but you know, so all things are what are going to be considered when we are looking at SIIs. Yeah, so that's systemically important institutions.
Now, Jed, what might this regulatory shift, how might it affect consumers in terms of data privacy, protection from fraud and unethical lending practices, and of course the overall financial security?
Yeah, so first of all, it's potentially positive. I really believe that we should first of all look at it from the positive side of things. If the bill is matched with clear data governance, you know, consumer protection and enforcement rules, it would work out very, very well. So the concrete improvements that we're going to highlight, we talk about data sovereignty and audit rights. Those must be there. Now, fair lending standards, because we have a lot of digital lenders now that are holding Nigerians at the jugular. You understand? We are currently in an economy where we need a lot of lending and we need fair lending practices. So all those things need to be considered. But you see, there's a caveat we need to look into. The bill has very, very good intent, but consumers will only win if the regulators publish enforceable rules, and not just even publish it, now make sure that by the time this rule starts playing out, by the time, say, 2026, when this bill becomes law, they do make sure that they enforce it. Because you see, there are a lot of principles and rules and procedures that, at the end of the day, a lot of times they are not followed, you understand? So at the end of the day, the consumer would be the one that's going to win. That's myself and yourself and 250 million of us out there.
All right. IT lawyer Jed Oyeneye, thank you so much for your time, sir.